Welcome back to Doc Tickers, where we take earnings calls and make them, well, make sense.
You could say we take the dense language of finance and try to make it digestible.
Yeah, exactly. So today we're doing a deep dive into Lockheed Martin's Q4 2024 report.
Yeah, and this one I think has some really interesting takeaways.
Absolutely. And for those who might not follow Lockheed super closely, it's obviously a defense giant.
Right. I mean, they are one of the largest defense contractors in the world.
Yeah, global. So kind of starting with the overall picture, what were some of the things that stood out to you from this earnings call?
Well, the thing that struck me right away was, Lockheed Martin is posting these strong numbers, right?
Yeah.
Even though, the defense landscape is kind of constantly shifting.
Yeah.
But they're clearly executing on their return to growth strategy. Their sales are up 5% year over year.
And they're hitting, what was it, $71 billion in sales?
71 billion.
Which is massive.
It's huge.
Obviously. But even more impressive, I thought, was their backlog.
Oh, yeah, that backlog is massive.
Yeah, $176 billion.
$176 billion. That's a record for them.
That's just like a mountain of future business.
Right, it's a mountain of future business. And it's not just the size of the backlog. It's really like the confidence that it signals.
Yeah, absolutely.
In their customers.
It's across like all their segments.
All major segments, aeronautics, missiles, rotary and mission systems, space, you name it.
So that really, to me, stood out as like, okay, this is a company that has like a lot of momentum going into 2025.
Yeah, they're not just sitting on that backlog either. They're actually working to try to convert those orders into revenue faster.
Yeah. Yeah, we'll get into that a little bit more. But kind of on the flip side of, these positive things, there were also some charges that Lockheed Martin took in this quarter.
Yeah, they had a couple of pretty sizable charges on classified programs.
And this is one of the things that's always interesting about defense companies is that you have these programs that, we as the public don't really know a lot about.
Right. We only get these little glimpses.
Right. So they took charges. One was in the missiles and fire control segment.
Right.
And then the other was in aeronautics.
Yes.
Which, charges obviously on the surface, that sounds like bad news.
Right. You see charges and you think, uh-oh, what's going on?
Yeah. But in this case, it seems like it's actually a sign of some really smart and proactive risk management on Lockheed's part.
Yeah, they are what the CEO called de-risking certain parts of their business, especially in the aeronautics program.
Yeah. So by taking these charges now, they're kind of clearing the path for smoother financials going forward.
Exactly. Yeah. Addressing potential issues now rather than letting them linger and potentially become bigger problems down the road.
And this seems to be something that the new CEO has been really focused on.
Yes, this de-risking idea, it keeps coming up.
It's this whole idea of risk-adjusted returns when they're bidding on these new contracts.
Right. So it's not just about winning the contract at any cost. It's about making sure that it's a profitable contract over the long term.
Exactly. And that's a big shift in thinking. For a long time, it was just get the contract, get the contract.
Yeah, win at all costs.
But now it's, okay, let's make sure that this makes sense for us financially.
Right. And that's good for investors in the long run.
Absolutely. Now, we can't talk about Lockheed Martin without talking about the F-35.
Of course. The F-35, it's their flagship program.
It's the jet that everyone knows.
Right.
And this quarter, there was some good news on that front.
Yes, they actually exceeded delivery expectations for the year. They hit 110 aircraft deliveries in 2024.
Wow.
And they're projecting even higher numbers for 2025, somewhere between 170 and 190 jets.
That's a lot of F-35s flying around the globe.
Yeah, and they even secured a new customer, Romania, which signed on for 32 F-35s.
Okay, so that's a good sign that there's still strong global demand for this aircraft.
Absolutely. I mean, the F-35 continues to be a really sought-after platform.
Now, what about the Tech Refresh 3 upgrade? Where do things stand with that?
Yeah, TR3, as it's known, it's making progress. But it looks like full implementation with all the benefits that come with it will probably stretch into 2026.
Okay, so that's something to keep an eye on because this is a big upgrade, right?
Yeah, it's going to boost the F-35's processing power, its memory, and its network connectivity.
Yeah. And that's essential for keeping it at the cutting edge, right?
Right, because technology moves so fast in this industry. You've got to stay ahead of the curve.
Absolutely. Now, speaking of cutting edge, the CEO had some really interesting things to say about the F-35's role in the context of China.
Yes, he went beyond the usual talking points about the F-35. It was almost like a philosophical defense of its importance in deterring China.
Okay, so how did he frame that?
Well, he emphasized the F-35's unique ability to act as like a central command node
Oh,
for swarms of autonomous drones.
so it's not just a fighter jet. It's becoming the brain for this whole network of unmanned systems.
Exactly.
That's really fascinating.
Right. It signals a shift toward a more networked and autonomous approach to warfare, and the F-35 is right at the center of it.
That's where the future of air combat's headed. So
Oh,
that's something to really pay attention to. Now, beyond the F-35, another segment that's really heating up is missiles and fire control, or MFC.
Oh, yeah, MFC, they're on fire right now.
Yeah, what's going on there?
Well, they're poised to be Lockheed's growth engine in 2025. They're projecting like an 8% jump in sales.
Wow.
Demand for their missile systems like the JASSM, Joint Air-to-Surface Standoff Missile,
Yeah.
LRASM, long-range anti-ship missile, those are just through the roof.
It sounds like the global demand for advanced weapons is just skyrocketing.
It is, and this is an area where Lockheed really excels. I mean, they're the leader in this space.
Yeah, and it's interesting to see them like expanding their partnerships, going beyond traditional defense contractors. They're teaming up with companies like Nvidia,
Right. Nvidia, Meta, IBM.
even Verizon for 5G.
Yes. They're really tapping into that cutting-edge commercial tech to stay ahead of the game.
That's smart because the line between commercial and defense technology is it's getting blurrier all the time.
Right. And those partnerships give them access to the latest and greatest in AI, in data analytics, in network connectivity.
Yeah, they can then take all that
Yeah.
and integrate it into their defense systems. Okay, before we move on to dissect the performance of each segment in more detail, let's talk about this elephant in the room, the new administration, and what impact it might have on Lockheed Martin.
Right. Because there's been a lot of talk about potential shifts in defense policy.
Yeah, the new administration's really emphasized streamlining the acquisition process. And they've also signaled a potential shift towards favoring fixed price contracts, which could be, a mixed bag for companies like Lockheed.
Yeah. Fixed price contracts, they mean tighter margins.
Yeah.
And, if costs overrun, that can really eat into profits.
Right, there's more risk involved.
Exactly.
But then streamlining acquisitions, that sounds like a good thing.
Right? It could be. I mean, faster contract awards would mean a quicker pace of innovation, which is good for everyone. But it could also lead to more competition, potentially putting pressure on profit margins.
Yeah, so it's really a double-edged sword. Now, the CEO seemed pretty open to these potential changes, especially the possibility of more multi-year contracts.
Yeah, he seemed to welcome that idea.
Which would provide greater stability and predictability for their business.
Right. I mean, multi-year contracts would be a win-win. The government gets to lock in favorable pricing, ensure a steady supply of these critical systems, and Lockheed benefits from that predictable revenue stream.
Yeah, it makes their forecasting a lot easier. So it'll be really interesting to see how all these policy shifts actually play out in practice and what the ultimate impact is on Lockheed's bottom line.
Right, because the defense industry is constantly evolving, shaped by both technological advancements and the political landscape. And Lockheed's ability to adapt to those changes will be crucial to their continued success.
Absolutely. Now let's shift gears and dive into the financials for each of Lockheed's business segments, starting with aeronautics, the home of the F-35.
Okay, let's unpack those numbers and see what's really going on beneath the surface. So aeronautics, even with that classified program charge, they actually saw their Q4 sales increase by 5% year over year.
Yeah, that is pretty impressive considering
Right.
they had to take that charge.
Yeah.
So it seems like that really speaks to the strength of their major programs like the F-35, the F-16.
Yeah, I mean, you hit the nail on the head there.
Yeah.
Those programs are really performing well.
Yeah.
And that 5%, that even includes a $700 million sales deferral from Q3 that was related to the F-35 program. So if you adjust for that and for the classified program charge, the underlying growth in aeronautics is actually closer to 7%.
Wow, okay, so the top line growth looks really healthy for aeronautics.
Very healthy.
What about profitability? Did that take a hit?
It did in Q4, yeah, primarily because of that classified program charge.
Yeah.
Operating profit was down 43% year over year.
Okay.
However, if you adjust for that charge, as well as a separate benefit that they had related to the C5 program, the operating profit actually increased slightly.
Okay, so once again, it seems like that one-time charge is really kind of distorting the picture.
It is, yeah, it's skewing the numbers.
Yeah.
But the underlying profitability seems to be holding up.
Yeah. So what does the full year picture look like for aeronautics?
Well, for the full year, aeronautics operating profit was down 11% on a reported basis, but that's largely due to that classified program charge.
Oh.
After adjustments, their operating profit actually grew by 3%, resulting in a 10.2% operating margin for the year.
Okay, so they're in a good spot, it seems like.
Yeah, I mean they're doing well.
Okay, let's move on to Missiles and Fire Control, or MFC.
MSC.
This is the segment that is expected to really be the growth engine for Lockheed in 2025.
Oh yeah, they're firing on all cylinders right now.
Yeah.
Their Q4 sales surged 8% year over year,
Okay.
driven by, production ramps on several key programs. The JASSM, LRASM, the Guided Multiple Launch Rocket System, GMLRS,
Yeah.
and the Patriot Advanced Capability 3 PAC-3 missiles.
So lots of acronyms, as always, in the defense world.
As always, yeah.
But yeah, I mean, it sounds like they're really seeing strong demand across the board.
They are, and if you adjust for the extra week in Q4 of 2023, the growth rate jumps to 16%.
Wow.
So it's very impressive growth.
Yeah, what is driving this incredible demand for these missile systems?
Well, it's a combination of factors. You've got global instability, you've got geopolitical tensions, and, these weapons have proven themselves to be very effective in modern warfare. So they're in high demand from both domestic and international customers.
Yeah.
And that trend is only expected to continue.
So MFC's definitely living up to its billing as a growth engine.
They are.
What about their full year performance?
For the full year, MFC sales were up an impressive 13%,
Okay.
driven by those same key missile programs that we just mentioned.
Yeah.
Their operating profit, however, declined $1.1 billion year over year.
Okay, that's a pretty significant drop.
It is, yeah.
What caused that?
Well, that was primarily due to a $1.4 billion charge related to that classified program we talked about earlier.
Right. Okay, so it seems like that one classified program charge is really having a ripple effect across multiple segments.
It is.
All right, let's move on to rotary and mission systems. What is going on there?
Well, RMS actually saw a decline in sales in Q4, down 10% year over year. This was driven by lower volume on several programs, including the Seahawk helicopter, the crash-resistant helicopter, or the CRH,
Okay.
the Aegis Combat System, and various C6 ISR programs.
Okay, so a bit of a mixed bag for RMS.
Yeah, a little bit.
What were the main drivers behind those sales declines?
Well, it's partially due to program life cycles.
Okay.
Certain programs are winding down, which naturally leads to lower volume.
Right.
There were also some delays and challenges in certain areas, but overall, RMS remains a solid performer with a very diverse portfolio.
Yeah. They've got a lot of different products and services.
Yeah.
What about their full year performance?
For the full year, RMS managed to grow sales by 6%,
Okay.
primarily driven by higher volume on programs like the Canadian Surface Combatant,
Okay.
laser programs within their integrated warfare systems and sensors business, various C6 ISR programs, and the ramp-up of the CH-53K heavy lift helicopter.
Okay, so it sounds like they have a good mix of programs that are growing and contributing to their overall performance.
They do, yeah.
And what about profitability for the year?
Profitability was positive for the year, with operating profit up 3%, driven by that higher sales volume
Okay.
and favorable contract mix.
Okay, so that covers 3 of their 4 business segments.
Right.
Let's wrap things up by looking at their space segment.
Okay, space.
How are you going on over there?
Well, space had a bit of a tougher quarter, with sales declining 13% year over year in Q4.
Okay.
This was mainly due to lower volume on programs like Next Generation, Overhead, Persistent Infrared, OPIR, Orion, and classified programs.
Okay.
If you adjust for the difference in the number of weeks in the quarter compared to last year, the decline is less severe at around 6%.
Okay, so it sounds like they had some volume challenges in their space segment.
They did.
What about their performance for the full year?
For the full year, space sales were down slightly, driven by those same programs that impacted Q4. However, Their operating profit actually increased by 6%,
Okay.
thanks to favorable contract mix and higher equity earnings from the United Launch Alliance.
Okay, so it looks like they're managing profitability well in that segment, even though they are seeing some volume challenges.
Exactly.
Okay, so we've covered all 4 of their segments now.
So we have.
Let's talk about their overall financial performance and their outlook for 2025.
Okay, sounds good.
So what did their overall financials look like for 2024? So overall, how did Lockheed Martin perform in 2024?
Well, they delivered, pretty solid results.
Okay.
They achieved 5% sales growth. They expanded their backlog to record levels,
Yeah.
generated $5.3 billion in free cash flow,
Wow.
and returned $6.8 billion to shareholders through repurchases and dividends.
Those are some pretty impressive numbers. It sounds like they had a good year.
Yeah, they did.
What is their outlook for 2025?
Well, they're projecting continued strength.
Okay.
Sales growth is estimated to be in the range of 4 to 5%, and they expect operating margins to return to their target of 11%.
Okay.
They also anticipate free cash flow to grow by about 9%.
Those are some strong projections.
Yeah.
What are the key factors driving this positive outlook?
Well, they're expecting continued strong demand for their core products,
Okay.
especially in their missiles and fire control segment.
Right. Yeah.
They're also benefiting from their proactive approach to managing risk,
Yeah.
which should lead to, more predictable earnings going forward.
Right.
And they're really focused on operational excellence, which should translate into improved efficiency and profitability.
So they seem well positioned for continued growth and profitability in 2025.
Yeah, they're in a good spot.
What about their capital allocation strategy? How are they planning to deploy their cash in 2025?
Well, they remain committed to returning value to shareholders
Okay.
through dividends and share repurchases,
Okay.
but they're also investing in their business
Yep.
to fuel future growth,
Yeah.
including research and development, capital expenditures, and strategic acquisitions.
So it seems like they have a balanced and disciplined approach to capital allocation.
Yeah, they're trying to find that right balance between rewarding shareholders today and investing for the future.
Right. So they are prioritizing investments that will, drive long-term value for their shareholders.
Yes.
While also rewarding those investors with consistent dividends and share buybacks.
Exactly.
Okay, well, this has been, a really comprehensive look at Lockheed Martin's Q4 2024 earnings
Yeah,
and their outlook for 2025.
it has.
They're clearly a company that is performing well
Yeah.
and is positioned to benefit from this growing global demand for advanced defense and aerospace systems.
Yeah, I mean, they're operating in a complex and dynamic environment, marked by geopolitical uncertainties, rapid technological advancements, and changing government policies.
Right.
But they seem to have a clear strategy, a strong leadership team, and a commitment to delivering value for their customers and shareholders.
Absolutely. Okay, before we wrap up today's show,
Yeah.
we have a special segment for you.
Okay.
It's time for This Is Not Financial Advice,
Oh, this is my favorite part.
where we take everything we've learned and cook up a wild but not totally insane trade idea.
Right, we put on our speculator hats.
Yes.
And see what we can come up with.
Exactly. And remember, folks, this is purely hypothetical
Yeah.
and for entertainment purposes only.
Yes, please.
Do not base your actual investment decisions on our crazy ideas.
Do not.
We are not financial advisors.
We are not qualified.
This is just for fun.
Yes.
Okay, disclaimer out of the way. Let's get speculative.
Okay.
So Lockheed Martin, they are clearly very bullish on their missiles and fire control segment,
Right.
projecting 8% growth in 2025.
Yeah.
And the CEO even hinted that these programs could have very long lifespans.
Yeah, he even compared them to Clint Eastwood's character, Dirty Harry.
Oh, wow.
Saying, when you run out of ammunition, you're highly, highly vulnerable.
Right.
So it's clear that they see a sustained need for these weapon systems.
Yeah, so here's our not financial advice trade idea.
Mhm.
Instead of just buying Lockheed Martin stock, let's get a little more creative.
Okay, I like where you're going with this.
Let's create a basket of companies that will specifically benefit from this increasing demand for missiles and munitions.
Okay.
Call it the Talk Tickers Global Ammunition ETF.
I love it. I love it.
Right.
Yeah.
So what companies would we include in this ETF?
Well, I mean, we would obviously have to start with Lockheed Martin, right? To anchor the ETFs.
Organization.
Yeah, the cornerstone.
Yeah.
And then we would want to diversify
Yeah.
by adding companies that supply, key components or materials
Right.
to these weapon systems.
Okay.
So companies that produce rocket motors, guidance systems, sensors, even the specialized metals and composites used in missile construction. There are a lot of companies out there that stand to benefit from this surge in demand.
Exactly. So we're not just betting on Lockheed Martin. We're betting on this entire global
Right.
missile and munitions industry.
A whole ecosystem.
Yeah. And then to top it all off,
Yeah.
we could market this ETF to investors who are looking to hedge against geopolitical uncertainty.
That's a good angle.
Right.
Ah.
Because in an increasingly volatile world, missiles and munitions might just be the ultimate safe haven asset.
The new gold. Yeah.
Okay, maybe that last part is a little bit of a stretch.
Yeah.
Even for our this is not financial advice segment,
Maybe a little bit.
but you get the point.
I do.
There's a real opportunity in this sector.
Yes.
And building a diversified ETF around it could be a great way to capture that potential for growth.
Yeah. It'd be a lot of fun to put that ETF together.
It would. All right, folks, there you have it.
There it is.
Our completely speculative, not to be taken seriously trade idea.
Right. Remember, this is all purely for entertainment. Yes. Do your own research. Consult with a financial advisor. And please don't blame us if you decide to launch an ETF based on our ridiculous ideas.
Yes, that's it for today's deep dive into Lockheed Martin's Q4 2024 earnings call.
Yeah, we covered a lot of ground.
We did. We hope you found it informative.
Yeah, and entertaining.
Yes, a little bit of both.
Hopefully.
Join us next time for another Talk Tickers deep dive.
Yes.
Where we will break down another earnings call
Right.
and see what hidden gems we can uncover.
We'll be back.
Until then, happy investing.